Hello friends. Well, you read the title. Is Islamic banking really Islamic? The essence of Islamic banking lies in the rejection of interest for loaning of money and in only making investments in business that provide goods and services that are consistent with Islamic principles. It is a relatively new field in the modern banking. The first Islamic banks appeared in the late 20th century with the help and guidance of world-renowned Islamic scholars and financial experts to supply Sharia-compliant banking principles to private and semi-private commercial institutions around the world. Modes of Islamic transaction. Islamic banking is commonly based around the following transaction modes mentioned here with their traditional banking counterparts. Number 1. Mudarraba. It's called profit sharing. Musharaka. Joint venture. Wadya. Safekeeping. Murabaha. Murabaha, sell and buy are cost plus. Ijara. Leasing. Buy salam. Contract of advance payment. Sukuk. Bonds. Sukuk. Bonds maybe. Takaful. Insurance. Some common criticisms of Islamic finance or banking. Islamic banking is far from perfect, therefore it has drawn its fair share of criticism as well. The Islamic banking industry remains somewhat controversial to date, and the question of whether or not Islamic banking is really Islamic remains a topic of discussion and hot debates among the Islamic economists and bankers as well among the general public. Still, despite that criticism, it may still be a better alternative to traditional interest-based banking. Critics most commonly claim that Islamic banking essentially mimics conventional banking in terms of interest-based financial transaction. They suggest that by simply renaming interest to profit or compensation for deferred payment, Islamic banks are only deceiving people into believing that they are complying with the Sharia. Sharia means Islamic law. In an article in late 2007, Mr. Salman Ahmad Sheikh claimed that there is basically no difference in the Islamic and conventional modes of financing. In his opinion, the only differences are procedural, which are minor and do not change the nature of the transaction. In response, an influential Sharia scholar stated that in essence of Islamic finances lies in actual economic activity, and there is different from interest-based lending. According to Reuters, Professor Ali Al-Karadaghi gave an interview with the International Sharia Scholars Forum 09, ISSF 09, clarifying that issue is the structure of these instruments and contracts and the burden of responsibility. He further stated that transaction of, for example, the bank undertakes responsibility in the commodity such as a car should be damaged or destroyed during the period. Compare this with conventional car financing where the responsibility lies with the individual, not the bank. By highlighting this key difference between Islamic and conventional banking, the scholar has also indirectly pinpointed one of the reasons why more nations have been looking into Islamic finance since the financial crisis. Comparing Islamic banking with conventional banking. Unlike traditional banking, Islamic banking can only be based on transactions whose source and objective is in accordance with Islamic law. As a result, Islamic bank offers no support for projects that involve activities that are against Islamic teachings. All transactions are purely based on halal investing and halal purchasing. Conventional banking is mainly concerned with the elimination of risk from financial transaction, where Islamic banking places the burden of risk on the banks, while the labor responsibility rests with the customer. Islamic banks bear the liability in their transaction with customers. On the other hand, conventional banks are not liable for any losses which are fully borne by the customer. That this difference seems from the Islamic law that any profit without bearing risk or ability is not permissible. Conclusion. Islamic banking has a long way to go before it can be called Islamic in the true sense, but there is a lot of work being done to improve Islamic financial products and to make them more relevant by fitting them into the capitalist economy. Developing systems that allow Islamic banks to be fully recognized by financial regulatory authorities around the world and to bring complete uniformity in the financial and accounting practices of these banks. At this point, Islamic banking can only be considered the lesser of two evils. It is still a better alternative for those who try to adhere to Islamic law by the hope that one day they will have an Islamic banking system that cannot be degraded with the label of imperfect. Till now, I hope you got your information about Islamic banking. Is it really genuine? Is it really Islamic? So for now, please take care of yourself and we will meet you soon.